So let's talk about a really strange day in the markets. November 11th, 2025. It was a day that told two completely different stories literally at the same time. I mean, on one hand, you had popping champagne corks and record highs. And on the other, a pretty serious pullback. So what was the real story hiding behind those numbers? Let's dive in and figure it out.
Okay, so here's the puzzle we need to solve. We saw the Dow Jones, that classic index of big American industry, absolutely soar to an all-time record. Awesome, right? But at the very same time, the tech-heavy Nasdaq just stumbled. So how does that even happen? How can one part of the market be hitting brand new peaks while another huge part is actually falling? That's the big question we're unpacking today.
All right, first things first, let's look at the hard numbers because the closing bell really painted a fascinating and divided picture. And there they are. I mean, look at that. The Dow Jones surged a really strong 1.2%, closing near 48,000 for a new record high. The broader S&P 500 managed to squeak out a small gain too, but then you see the Nasdaq down 0.2%. Now, that might not sound like a huge drop, but when the Dow's having a record-setting party, it's a huge contrast. This isn't just random market noise, folks. This is a signal.
So what was that signal? What was it trying to tell us? Well, it points to a really big theme that completely dominated the day's trading, something called the Great Rotation. And this is the core clue to our entire puzzle.
This rotation was basically a big money shuffle between two different kinds of investments. On one side, you have value stocks. Think of these as the established blue-chip companies, the big banks, the industrial giants. The kind of stocks that make up the Dow Jones. And on the other side, you've got growth stocks. These are the high-flying tech and AI companies that are all about future potential, the very heart of the Nasdaq. And on this day, money was flowing out of growth and into value.
So why the big shift all of a sudden? Well, investors were starting to get a little nervous. After a massive run-up, people began to look at the sky-high prices of many tech and especially AI companies and started to ask, hang on, are these companies really worth that much right now? And many of them decided the answer was maybe not and moved their money into assets that seemed safer and maybe a little undervalued. And if you want a perfect real-world example of this, just look at the AI chip leader, Nvidia. Its stock fell nearly 3% on that one day. When an absolute giant like Nvidia takes a hit like that, it tends to drag the whole tech-heavy Nasdaq down with it, which perfectly explains why that index was so weak.
But hold on, this rotation wasn't just a story about stocks switching places. We can actually find some really solid supporting evidence over in the commodities market.
And yep, the numbers here tell the same story. Crude oil, gold, silver, they were all up. This is no coincidence. Investors weren't just moving from growth stocks to value stocks. They were also putting their money into hard assets. Oil went up because of supply risks, and precious metals like gold and silver rallied because, well, they're the classic safe havens when things feel uncertain.
This climb in commodities was really fueled by a potent mix of factors. You had hopes that the Federal Reserve might cut interest rates, which always makes gold look more attractive. You had geopolitical tensions like sanctions on Russia, pushing oil prices higher, and just hanging over all of it was a general feeling of economic uncertainty, which always drives investors toward the perceived safety of precious metals.
And now we get to the master key, the one piece that really unlocks the entire day's events. Because underneath the stock rotation and the commodity rally, there was one major force pulling all the strings, and that was geopolitics. The biggest political story of the day, by far, was happening right in Washington, D.C. After a really painful 41-day stalemate, the U.S. government shutdown looked like it was finally about to end. The Senate had already passed a funding bill, and on this day, the House was getting ready to vote. That news sent a huge wave of optimism through the market, especially for those value stocks that really depend on a stable, functioning economy. But it wasn't just the shutdown. There was a whole host of other global pressures weighing on investors' minds. You had ongoing trade tensions with China, sanctions on Russia, persistent conflicts around the world. All of it created this backdrop of risk. And an environment like that makes investors rethink their entire strategy, pushing them away from those high-risk growth stocks and towards safer bets like value stocks and commodities. Okay, so we've pieced together all the clues, the split in the stock market, the rally in commodities, and the geopolitical stuff driving it all. So what does this all mean? What's the final verdict, and how can an investor like you make sense of it? Let's build the playbook.
So here's the most important takeaway. The mixed signals we saw on November 11th were not a sign of a broken or chaotic market. Not at all.
This was a completely logical and rational rotation. You had smart investors processing new information about the shutdown ending, about global risks, about tech valuations, and they were simply adjusting their portfolios accordingly.
And that clear-headed thinking leads directly to this playbook, which is basically what the market itself was doing. First up, favor value stocks over those high-growth tech names, at least for now. Second, use precious metals like gold and silver to hedge your bets against uncertainty. Third, keep a close eye on energy, because it can actually benefit from all this geopolitical turmoil. And finally, number 4, you've got to stay vigilant. The world is changing fast, and the factors driving these shifts are constantly in motion.
You know, at the end of the day, a day like this is just a fascinating look into the market's collective mind. It's a powerful reminder that underneath all the daily noise and chatter, there are powerful, logical shifts happening. The market literally just showed everyone its new playbook. The only question left is your portfolio listening?